get a view from Amit Purohit, Vice President Research Analyst at Elara Capital, on the HUL numbers and then what we're really seeing as, because that's the weather vane, right? And which is why you're seeing that impact across the board on FMCG. So great to speak with you, Mr. Purohit, and thank you for joining us on the show. Let's start with your take first on the numbers. On the face of it, it seems that estimates were penciling in an even sharper cut. Maybe the numbers optically are slightly better than what was estimated, but it's the commentary which has got the street worried. Is that the way you would put it?
Yeah, hi, good morning. If you look at from a numbers perspective, the numbers were broadly in line with our expectation. But like you rightly said, that the commentary has not been good, more with respect to the outlook that the management shared on the near-term demand. So the challenges persist with respect to the urban growth, even if the rural demand continues to remain strong. So that is dragging down the overall growth for the company, and volume growth was flat for the quarter, with no signs of a good uptake, at least in the near term, it seems. And added to that, there was some kind of revision in the margin guidance as well at the lower end of 23 to 24. So these two things were kind of negative, which came in from the results.
In terms of commentary, what they're saying also about discretionary spends, what they're saying about small packs, how are you looking at that?
Yeah, so from a small packs perspective, clearly that highlighted the point is that inflation having an impact on the overall consumption, and consumers looking to prefer small packs even in the premium segment, which has been the recent trend, which clearly as the overall economy recovers, more from a perspective of the income levels improving, there would be some bit of transitory nature of the same, with consumers going back to larger packs. But at this point of time, because of the high inflation coupled with low income growth, this is impacting the overall consumption within the FMCG space as well. As we hear from other companies also, press releases which had highlighted a slightly muted growth for the quarter of December.
So let's talk a bit about volume growth, because volume growth, yes, was muted, that was expected. Is the outlook that this will deteriorate further, or is this the bottom? Just trying to get your sense on this, Amit.
So our sense is that it's more likely to be at these levels as of now, where there is some hope with respect to the sustained rural recovery, and the base effects which starts to come in as the urban has been slowing quite rapidly in the last couple of quarters. So some bit of improvement would be visible probably in FY26. Having said that, whatever the expectation was there, there has been some cut in that expectation for FY26 beyond FY25. High single-digit growth of 8-9% revenue, that would rarely depend upon a very strong recovery in urban as well. So from a numbers perspective, I think incrementally the growth would be largely price-led, and that would be optically would look better in terms of the revenue growth, what we have seen in Q3, which is December quarter at 2%. The subsequent quarter, the revenue growth would be a bit better. Volumes would probably should be at similar or slightly. So I don't expect a significant worsening of a scenario from here on, and pricing helping the companies to report a better revenue growth.
Two things which are noteworthy, and your view on both of them before I move on to the broader FMCG space. One is the Minimalist acquisition at 2,955 crores. I mean, do you see that being a big driver for an HUL?
So, I mean, if I look at from a contribution perspective, this would be just closer to or slightly lesser than 1% in the overall revenue. But one has to look at more from a perspective of the strategic initiative that the company is taking in broadening their product portfolio, especially making their brands much more stronger in the masstige and above segment. which was a missing link. And I think in their analyst meet as well, they clearly highlighted their clear focus on driving this growth, this segment. And hence, this strategically, it seems to be a very good thing. Obviously, from a contribution to the revenue, it won't be significant enough to move the needle as of now.
Is what matters. Let's talk about the demerger of the ice cream business in the 1:1 ratio. Of course, quality walls will be listed in March 2026. From investor perspective, is that any kind of an attraction?
No, I don't think so. I mean, basically, it's a clear focus of management towards deciding on some of the categories that they want to see to drive future growth. And ice cream is one which the company thought that probably hiving off or demerger would be a better from an organization goal perspective. And that's about it. I don't read too much into this to be a significant change from an outlook perspective.
Amit, let me just broaden that to, what is happening with the rest of the FMCG pack, because this morning we saw not just HUL take a tumble, but others as well. In terms of what their outlook is, their commentary is, do you see that as maybe not such a bright picture being painted for the entire pack of the majors, Nestle or Britannia as well?
Yeah, so the commentary of Unilever HUL indicating that urban continues to slow, which would have an impact on other companies as well, whether it is Nestle, which has a higher salience on urban, or even for that matter, Britannia, which had called out last quarter as well with respect to their commentaries on the urban slowing. So these companies would have an impact on the, and anyways, I mean, Q3 numbers for most of the companies and the industry discussions broadly indicates that it is not going to be very strong on the revenue side. And there has been headwinds with respect to margins in some of the categories which are largely driven by palm oil.
Can you tell me a little bit more about these headwinds? Because if we are going to expect a little bit more pressure when it comes to EBITDA margins on the back of higher raw material costs, it does seem like the pain would not be over, and certainly not in the case of FMCG companies.
Yeah, so I mean, one is that always the raw material prices going up, it takes time for them to actually pass on the price increases. And last quarter is when companies have started to take price increases. And this should continue in Q3 as well. There will be some effect. Q4 is when we probably will see that if the raw material prices remain as they are, profitability deterioration, which we have seen, would kind of start to reverse on a sequential basis. That's what probably should be the case.
And Amit, what would your prognosis be when it comes to demand in food and beverages as against perhaps cosmetics? How are you expecting both these separate categories to shape up? Do you think that demand for one could be better than the other?
Yeah, so from a non-food perspective, I think there has been a slower growth over the last couple of years, and there's a bit of a hope that non-food should do better in terms of the price increase that they have taken. Food is the other segment where actually broadly the competitive intensity also remains high, with the entry of Zomato and all, which clearly indicates that the consumers probably may look at some new alternatives in terms of consumption from a food perspective. Whereas in a non-food, the competition is between the brands and not within the category. Whereas when we look at food, there is competition across within in different categories. What I want to say is that consumers are probably more not category loyal in a food, whereas in a non-food, the consumers are more category loyal. So to that extent, that risk is a bit more higher in food versus the non-food. But within food, I think there are certain segments which probably do well, and those are kind of categories where companies are very strong market leader, and there is significantly no competition in those segments. Those are the ones which probably will still probably do better. Rather than dividing that into category, we probably would look at some specific companies which may probably have where the competitive intensity is less and the growth outlook is better.
Amit, we'll leave it at that. Thank you so much for talking to us here on NDTV Profit and giving us your perspective on how the sector could potentially pan out.